right. All right. CNQTSE, Toronto Stock Exchange. And CNQ, what does that stand for? Canadian Natural Resources. All right. And this has caught my attention because of this ADX under 20. I don't trade the ADX, but it's giving me a good indication that it's the trend's consolidating, stage 1 or stage 3. And let's look at the price action right here, what happens. All right, here there seems to be, there's a resistance, 46.50, support. When it's low, it's 36 right here. Shorter term, 37. Let's try it here. All right. So I like to always do that. Start by the extremities, and then after that, drill down to what the price action is actually doing. And this is the stage. Here's this nice stage 3 right here. But I'm looking right now at a possible stage 2. I think it's going to go, it's testing, it's going to go test this breakout line right here. Above 30-week moving average. Above that breakout line. Above the Ichimoku cloud. Remember, if you're above the green, you're in an uptrend. If you're below the red, you're in a downtrend. And as time moves on sideways, then the cloud gets thinner and thinner, and goes from green to red to green to red. And after that, eventually, if the price action goes up, then you'll start having this green cloud like we had right here. So right now, we're kind of in no man's land at 42.50. There's no real entry. We'd have to wait also for our confirmation on the twice the average volume of the previous 4 to 5 weeks. And you'd want, again, this is the RSI, it's the traditional RSI, it's not the Mansfield RSI that Stan uses, but I still use it. If I see the RSI is going halfway point into upwards territory, it's my indication that it's on the right track. So that's what you're going to keep an eye on for CNQ. And if I want the higher trend, see what's up with that. See we're on the good side. And you see where we set our line here for the resistance, the breakout line? On the weekly, it would be actually lower on the monthly. On the shorter term, would be right here, 45 area. Here's a shorter term pattern that's within the bigger pattern. And even the bigger pattern, let's just move that one. Here's a breakout. It's at 46 is the breakout line. Where we had the, I think it was here, the first, that wick, that's the intra noise of the intra candles, of the weeklies, the dailies, etc. But on the monthly, what counts is this one right here. So let's put an alert here. Let's put another alert at this intermediate pattern, closer to the price action. And we put another alert for the breakdown, if ever the price action decides to go back down, which is very possible. As long as we're within this big pattern, no man's land. If you jump the gun and you enter without a monthly candle close above, ideally this the 46 level, then there's a chance you get trapped. That you won't have the momentum of a breakout on your side, and you'll just lose time. It might eventually go out, might not, but you want to be there when it goes out, full steam ahead. You don't want to be trapped in there and then just get whipsawed, and after that you don't know, you're thinking too much, you don't have a provision for that in your trading framework, you don't know how to handle it. And that's what I've realized most of the times I wasn't myself in that situation. It's because I didn't respect my own trading framework. As soon as you deviate from your trading framework, everything that you've built your trading framework to accommodate, to have plans for whatever action or scenario that came in front of you, if you get out of that, then you're no man's land. You're on the greed, you're on emotions, and after that, it's just gung ho, man. You're just sitting duck right there to get to pick yourself, to trigger yourself out, and just take wrong decisions. And hopefully, you don't start doubling down and do some crazy stuff there. Try not to even have that word in my vocabulary. And that's what it looks like right here. Wow. So started with two alerts, and I have 1, 2, 3, 4, 5, 6. And that's good. There's nothing wrong with that. But this definitely, see that on the monthly candle chart, you see the cycles, the stages. Let's call the stages cycles. 1, 2, 3, 4, 5. So you see this big cycle here. How long does it last? This one started July 2009 and reached halfway mark July 2011, so 2 years, and July 2013, so we're going back up. So every 2 years, 2 years uptrend, 2 years downtrend. 2013, no, yep, stopped here. It's like the bottom for the front. Okay, July 2009 and finished July 2011, 2 years. Just July 2011 to January 2013, so a year and a half. And then January 2013 to July 2014, a year and a half. And July 2014 to January 2016, a year and a half. And right now, we're on, it actually stopped right here on July, just before July 2017, so a little less than a year and a half. And now it's kind of no man's land. Instead of going back down and respecting the cycle it's been through, it's we're extending that stage 3. Where it's going to go, we'll have to let the market digest whatever it has to digest. So these are nice cycles. And my point of what I was going to is, this is 10 years of data, monthly candles. But within those 1 year, 1 year and a half cycles, you have other smaller cycles. 30-week moving average represents pretty much the same cycle as a 10-week moving average, the 10-period moving average on the monthly. Just as I think the equivalent of the 30-week moving average, I think it's the 150-day moving average, simple moving average, or 200. I think 150. And if you keep those moving average, you should still have the same. You should still see the same amount of cycles. Whoa. Move that bar. See, January 2011. Bottom January 2013. And here we go. If you'd be on a faster moving average, a smaller moving average, instead of the 30-week on the weekly chart, you'd have the 10-week. You'd see more stages, more cycles. And here we are today. Here's where I put my line, right there. So what are we going to do with that? So CNQ, I think it's time to set the alerts. And keep an eye on this one for a big move. I got sidetracked. Let's go back to monthly chart. Boo. All right, here we go. And if I would be doing this on my classical charting, I'd have the furthest away, at least probable target right here. And yeah, that's what I'd have, a 55 target. There would be some resistance here at these. See those launching patterns could eventually. You always need a good dose of imagination. So create yourself some black space. Don't put it. If you put the chart like that, it looks like a top. If you put it like this, it looks like a bottom. Just try to center it. Make sure there's a lot of black space. And right here at the 48 level, 48.50, there's going to be some other. There's going to be some turbulence. There's going to be some turbulence right there. And you see that pattern, which you think looks big. Then you look at this one, looks even bigger. And you could squish it down if you want to. Want some more. And that could be. Wow, even a bigger view. So it's all a question of perspective, right? You have to really be careful with your charting software. And what I thought was going to be a big move, finally, what could be happening here, this pattern, we might get another congestion here, a launching pattern, and this would be the ultimate mega duper, super duper move, and giving you a target of, bam, all the way out here. Why not? This looks like a huge base. And what you see sometimes as cycles within cycles, well, maybe this is just the bottom of a longer, more prevailing cycle. So if I would have the moving average instead of the 10, I'd have, let's say, the 30. And let's say I'd have the 20, 30 years of data. This could just be the bottom of it, and then it's starting to go back up. So always, if ever you're having a discussion with somebody, conversation, and they say, I think it's an uptrend, you think it's a downtrend, I think the first question you should say, okay, what time frame are you looking at? Are you looking at 5 years of data? Are you looking at weekly candles? What's your moving average? How are you defining your uptrend? And once you get that out of the way, then you could have a conversation which could mean something. And you're probably, if you both talk about the same framework, the same setup, then there's big chances that you'll both be in agreement. Most disagreements usually is people, they dive in, they assume people are thinking the way they are, that they have their charts up the same way, they're looking the same time frame, and they don't realize that somebody on a scalper, he could have 20 cycles during a day. He could have you could say, it's bullish today, it's going upwards. And he's right if he's looking at his chart, but if he wants to have a discussion with somebody that's on a different time frame, you got to change that mindset. So this is a big picture for CNQ with my classic trading system, trading framework. And I'm looking at it through stance view. I like the ADX. And I'm just waiting for that breakout here above. And I'll have the power of the monthly candles, of that higher trend, higher, more prevailing trend, if we could break out to the upside. If we go downwards, well, I'll have to review when you get there, guys. All right, man. Thank you. Thanks for being there. And see you when the alerts get triggered. Ciao.